Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. U.S. making moves. The United States is starting off 2026 by making some big moves, with the biggest being, of course, this past week, the capture of Venezuelan leader Nicolas Maduro. And while there are plenty of reasons being given for the move on Venezuela, the fact that the country sits on the world's largest oil reserves, along with one of the world's largest gold reserves, I might add, is what probably matters most to markets. Now, make no mistake, the U.S. is making a move into hard assets to shore up U.S. dollar as the world's reserve currency, as well as U.S. monetary hegemony. Talk of acquiring Greenland only reinforces this point. Now, this will allow the U.S. to lower short-term interest rates without risking, or at least lowering the risk, of further weakening the dollar and putting upward pressure on inflation. In addition, President Trump announced he wants to increase the defense budget by about 50%, presumably to backstop the aforementioned actions, as well as to head off potential aggression from China in attempting similar actions. For this week's featured insight, know your beneficiaries. The beginning of a new year is always a good time to take care of those housekeeping items that you've been putting off for way too long. One of these things should be reviewing the beneficiaries for all of your financial accounts. You may even have accounts that don't have any named beneficiary designations currently in place. It's possible your circumstances may have changed and you forgot to remove your ex-spouse as a beneficiary on an account, for example. Retirement accounts allow for built-in primary and contingent beneficiary designations, so they're pretty easy. Most non-retirement accounts will allow you to put in place what's called a transfer on death agreement, or TOD, which bypasses probate and allows for the easy transfer of assets to your heirs. Looking ahead, another earnings season approaches. Earnings season begins next week with several of the big banks reporting their fourth quarter numbers starting on Tuesday. Now, expectations for S&P 500 earnings growth in 2026 is quite high at around 13%. So the bar's pretty high at this point, but it's hard to argue that many tailwinds are out there currently in place that should propel earnings for the next few quarters. Regardless of that fact, however, the best indication of where the economy is headed usually comes from what corporate managers themselves are saying about their business outlooks. And as always is the case, all eyes should be on the direction of change in forward earnings estimates. They've gone from falling at lesser rates throughout most of last year to more recently being slightly raised in anticipation of some economic strength building into 2026. If the rate of change of earnings expectations continues to improve as we move through this earnings season, the stock market should be positioned to continue higher for at least a while longer. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.